There's nothing wrong with minimising tax. I don't know anybody who doesn't minimise their tax.
And that you were doing so in ways that were contrary to the spirit of the law.
Oh. Well, I just got through telling you what I thought about that. I am not evading tax in any way, shape or form. Now, of course I am minimising my tax, and if anybody in this country doesn't minimise their tax, they want their heads read. Because as a government, I can tell you, you're not spending it that well that we should be donating extra.
Thanks, Stella. Good afternoon, everybody, and a very warm welcome to another one of our interactive webinars. Today's a fantastic topic, one that we're all very passionate about, minimising tax. So I look forward to being joined by our three experts shortly. I'll just take us through a quick insight and share some of what the late, great Kerry Packer talked to us about. If anybody is not minimising their tax, they need their heads read. What a great statement. That's actually about an hour and a half video of a Senate inquiry with Kerry Packer many years ago. It's a great watch if you've got time. He has some really good insights into how, as a business person, he makes more money and minimises tax. He brings up some fantastic points, and he states that the law is very complex and continually added to, often very confusing. But while he minimises tax, he stays well within inside the rules and regulations. And in fact, the rules and regulations give him great comfort to continue to minimise tax. But they also, he makes a very clear point, give him great comfort to continue to make money and look for ways to prosper. Whereas tax minimisation is certainly a point of clarity, it's not his only point, and it shouldn't be your only point either. It gives us great structure to build our wealth and to continue to grow businesses and continue to grow incomes, while not only focusing on one thing of tax minimisation. So it's a great look up on YouTube. It takes about an hour and a half. We've just taken a couple of clips out of it, but some really good insights. So today we're going to cover off a few of those things and also share the insights of over 20 years experience of our directors as accountants and forward-facing advisors as well, sharing some experiences we've had with clients of the most common questions come tax time. We're also going to talk a little bit about those questions that we should be asking more and preparing for when we come to meet our accountant. So before we do that, we'll talk a little bit about Modoras and give you an insight to how we help our clients. Thanks, Stella. The Modoras Group has 16 locations and over 200 staff and 55,000 clients and growing across three main brands. You may have spoken to all of us or some of us. Modoras looking after Brisbane, Gold Coast, Sydney and Melbourne, and of course RJ Sanderson and the Banks Group in Victoria. Thanks, Stella. This next slide really shows how our business has grown. It's an absolute focus on our clients, but another thing it does, in particular today's webinar, it really sets a fantastic agenda for things that we all should be talking about come tax time. How do we start to prepare and plan for our time with our accountants? Now, traditionally, we see our accountants once a year. We go on with, in the old days, a shoebox full of receipts. Now it's a laptop or a pre-populated spreadsheet of our receipts. And we think about what money can we save against the money we have already spent. In other words, we look in reverse. The most successful, and this is something that Kerry Packer was really hitting on heavily in his Senate inquiry, the most successful or most financially successful people take this time as an opportunity to plan with professionals and mitigate and minimise your tax, absolutely, but also open up opportunities for your possibilities to grow wealth and increase your structures. So this service circle that we talk about is the foundation from which we've built and continue to build our business. It's the way we engage with our clients, but it's a great agenda to talk to your accountants about. So if we look over to the left, we've got tax planning. That's the most common discussion point for people coming to see their accountants. If we work our way around the circle, surrounded by our finance professionals, you get a much deeper understanding of areas that you can work towards, whether you be a mum and dad investor or a business owner. All of these aspects really do take into account how you can minimise your tax and grow your wealth. So the things to be aware of course, is tax planning, minimising tax. If you're not doing that, you need your head read, according to Kerry. Finance and lending, getting your debt structures right, superannuation, including self-managed super funds, investments, retirement planning, personal and asset protection, making sure you're planning for downturns. COVID, we've just been through one of those, so making sure you're aware of those types of things and planning for the worst. Integrated estate planning, this comes very important when you're transferring wealth, which is fantastic. Business accounting and consulting services, growing your business with absolute foresight. cash flow and debt management, taking control of your financial situation and making sure it's working for you in more than one way. That's very much about working smarter, not harder, which is a big context of today. And of course, business structuring and succession planning. All of those things form a much larger and deeper discussion for everybody to be having with your accountants and advisors come tax time. So with that in mind, we'll start to work our way through some of the most common questions and some of the experiences we've had with our team. Thanks, Stella. Before we go any further, just a general warning. Today will be lots of facts and figures and experiences presented. Please be aware today's advice or discussion is general in its nature. Please don't take any of this as personal advice. There will be many things that really reflect and resound with you. Please pick up the phone and take the chance to speak to one of our professionals to make sure it is very personal and very much suited towards you. Today is just general in its advice. Thank you, both accounting and financial planning. Thanks, Stella. Okay, joining us today, as Stella said before, we have Alf and Ian, directors from Ian, both accountants and many years of experience working with business owners and mums and dads, minimising tax and planning for businesses. Ian's also an executive advisor, so a great wealth of advice. I'm looking forward to hearing from both Ian and Alf today into answering some of our questions. Also, Tony Sarai, head of our investment committee and executive planner. Tony has a great wealth of experience in growing personal wealth as well. So we've got three absolute professionals here with well over a minimum of 20 years experience each in dealing with these types of discussions. Today's topic is very specific. What do the most successful people do in terms of asking questions to their accountant at tax time? Great topic. Thanks, Stella. Okay, what are we thinking about and what are we asking our accountants at tax time? As I said before, or as Stella said in the introduction, we've had a great amount of questions sent in prior today. Thank you for those. I've got nearly 2 pages on a computer beside me now. And not surprisingly, when we got together to build the slides and to build today's discussion, you could group all of these questions here. There's nearly 80 of them now. Questions, you could put them into groups of 3 or 4. The questions are all very much similar to what we're going to talk about today. A couple a little bit different, a couple of outliers, and there are a couple focusing on working from home during COVID, so that's still minimising your tax discussions. So we'll go through some of those today. I'll leave some to the end, but the main portion of today's discussion covers everything that we've got today. So it's not surprising that over 20 years, the questions are still the same for many people come tax time, when what we'd like to do is really expand those questions and expand it into a much wider and deeper discussion. There's so much more you can do at tax time. Thanks, Stella. Okay, here's our first slide. The most common questions asked at tax time. I will introduce Ian, Tony and Alf during this and we'll answer these questions. But if we could break all of our questions, including, as I said before, the couple of pages I have here beside me that you've sent in earlier and in our experience, they really do sit in these 4 key areas. The first one most people start with is, how do I pay less tax? As Kerry Packer pointed out, if you're not doing that, you want your head read, but everybody wants to pay less tax. But the question really is that where you should start? Is that the most important question? The next question too, though, what would you do if you did pay less tax? In other words, what do you really want to achieve with that excess cash flow? Is that really the question, or do you just want to pay less tax? Those who are looking for more success have a really clear understanding of what they would do with that excess cash flow. So that is actually really the key goal. The second question is, I want to buy a property so I can negatively gear, pay less tax, and rent will pay the property off for me. What do you think? A very common question, and there's some good stories and some bad stories that associate with that. The third one is, how much can I put into super? That has changed every year over the last couple of years, so that's a regulation, but certainly something you can think about. And should I set up a self-managed super fund? I've heard they're good to save money on taxes and fees. So 4 really common questions there. Ian, could I hand over to you first? What's your thoughts on that? How's that? Does that cover a normal discussion with you when people turn up to your office?
Oh, look, it's first of all, thank you for only saying just over 20 years experience. Makes me feel a little bit younger today. Look, they are very common questions. Now, it's been a while since I've actually done individual tax returns or tax returns. In fact, it's 12 years, but they were the questions I was getting asked back in those, back when I was actually doing tax returns regularly. I always find them an interesting question, because yeah, how do I pay less tax? Well, there's many ways you can pay less tax, but what's the actual result you're wanting? For example, is a simple answer. You can pay less tax by paying your accountant more. You know, you get a tax deduction for it. It's a tax deductible. But what's what are you actually getting from it? You can pay less tax by, for example, in a business, you can go, you know, with the amounts you're allowed to now buy equipment and get a full tax deduction. You can pay less tax by doing that. But is buying that extra equipment going to generate you more income in the future? So there's a range of questions around that first one. The second one is one I always love. What's the purpose of the investment? What are you actually trying to fund? You're buying an investment, and your conversations there all about tax. And this is what I suppose the most important thing I want to get across. If you're worrying so much about tax, you're only thinking in a very short term. You're thinking about what's happening today. You're not actually thinking about your future. Negatively geared, if you actually go through, a lot of people, for starters, don't understand negatively gearing. Negatively gearing, yes, means you do get some money back, but in order to get money back, you lose money. You're actually losing cash flow. And you're only getting a part of it back. You're not getting all of the money you're losing back. It's at someone's marginal tax rate. So what do you think? Well, again, purpose, reason for doing it. If it's just to save tax, well, why? You know, again, it's nice to minimise tax, got no issue with that at all. In fact, I seriously encourage it in every strategy we put together. But again, why are we doing it? How much can I put into super? That's a really good question, because it does vary, and there is some significant tax advantages in putting money into superannuation. Basically, you are reducing your tax liability by your marginal tax rate, which, for example, if you're on over 37,000, actually, Alf could just correct me if I'm wrong on that one, because as I said, it's been a little while since I've done that. You're going to pay 34.5 cents in a dollar tax. Your contribution into superannuation is 15 cents in a dollar tax. So on that money, you have just made 19.5%. So conceptually, it is a way of saving tax and giving you an opportunity to build wealth. But if you don't invest that money well, one, it's not really much of an advantage. Secondly, and here's an important one. If you're younger in life and you're not looking at retiring for another 25 years, and well, let's say you're 40 years old, you can't actually touch that money till you're 60. Is that money that you're going to try and save tax with better utilised in doing something outside of superannuation to fund other goals you have in life? Maybe children's education, renovations, whatever it might be, large holidays, or even, importantly, early retirement. If you put it into superannuation, you're not retiring before 60 if that's where you're putting all your money. So again, how much can I put into super is a good question, but you need to think about why and what goal is it we're trying to focus on. And just as importantly, making sure that's invested well. A lot of people want to put money into super and they don't actually understand super. They don't even understand the superannuation fund they've got. And the last one, is should I set up an SMSF? Yeah, that's a nice question. Reality is, unless your circumstances are appropriate, the answer is no. But everyone's circumstances is different. They're not as cheap as what they are made out to be. You can save money on tax and fees through various ways of holding your superannuation money. You can actually invest well and have your own investments working with an advisor on various platforms, not just self-managed superannuation funds. But for some people, yes, there is some significant advantages in having a self-managed super fund, but it's not a general comment. Again, for every single one of those, for every person, there will actually be a different answer, providing we focus on what is the result you're wanting, not just tax.
Good points. A lot of the ones at the start stipulating a tax return or a tax refund is if you're spending $1, you're getting 30 cents back in very rough terms. So that 70 cents needs to be making money for you to be really effective. It can't just be a spend and get 30 cents back because you're effectively losing money. Yeah, so that's part of the discussion. The second one is putting money into super. I wouldn't mind you expanding on that a little bit more, particularly for those who are looking, do they start to increase their salary sacrifice? What are some of their other concerns? Things I've heard you talk to people about in the past are, considering paying down their mortgage, which would help them retire sooner. So lots of people I know have spoken about minimising tax and retirement planning, thinking super is the only answer. Getting rid of their debt and investing in their own name, that's also an opportunity as well?
Absolutely. And again, you've got to understand, well, what is retirement? Retirement is, in general, you're stopping work. So what you have built up as assets, plus maybe in some age pension, but what you've built up in financial assets that's there to fund your retirement. So first of all, understand what retirement is. And for every single person, that is different. There's no such thing as an average retirement. Everyone wants a different amount at retirement. So superannuation is a tax structure. It is an excellent tax structure. If we have nothing coming up before the age of 60, which is when we have access to superannuation, it is a very cheap tax structure. In fact, when you go into retirement phase and there's a few other conditions are met, your tax rate is the best in the world. It's naught. In actual fact, at this stage, after the last election, we still get refunded tax franking credits in there. So it's the best tax result. However, you're right. When you get to retirement, because you no longer have another form of income, i.e. your wage or your business paying you something, it is better not to have a mortgage or any other debts, because now not only does your assets that you are not topping up anymore, not only do they not have, they have to fund your lifestyle and your goals and everything else you wanted, they've also got to fund the debt. But so you can actually turn that around. And if you want to retire or be in a position to retire or have a major goal before the age of 60, super is not the only answer. It has to be something outside of superannuation, because you don't get access to it. And yes, that is tax effective in superannuation, but we can structure things up in different ways to make it as tax effective as possible whilst investing to achieve a result.
Yeah, great. Well, mate, not the only answer. I think that's really a key message of today, that any one solution is not the only solution. It's got to be a spectrum. And speaking to people and being prepared about that is really key. Thanks, Ian. That's great. Alf, from you as an accountant, also a business accountant, how do these discussions sound? There's similar discussions with small business owners and business owners as well as the mums and dads?
Yes, Paul. Look, I have to. You're almost. I'd almost be echoing what Ian's saying. It really comes down to, for me, what I do sense. Everybody has the frustration of paying taxes, and if we had a choice, we would rather not do it. But I think it's the focus on the tax, and then to me, what I see is there appears to be, in a lot of cases, almost a jump to a solution. So the rental property clearly becomes my solution to not paying tax, and you think, okay, well, yeah, sure. As Ian explained, if you did have a rental property where you had a very high lending on it, you'll get some money back for sure. But you've got to understand that you're making a loss. And so, to me, sometimes it's almost a jump to a solution, a jump to a product, without really understanding the long-term implications of that investment. And simply looking at, okay, it's going to save me some tax this year. And that may well be the case, but if it's a terrible investment over a long period of time, then you've really done yourself a disservice by jumping to that solution. So in terms of, and point number 2 is perfect. The question, the way I would answer the question is, well, really, what's the purpose of buying that rental property? If it is purely just to save some tax, then I would say, well, we're approaching this the wrong way. Because again, I know you guys have heard this before and heard it 100 times. There's no point in spending $1 to save 30 cents. To me, that's a false economy. And so therefore, I would say, well, don't focus so much on that tax. Really, should there be or is there is that a right investment for what I'm trying to achieve? And similarly with, and we do get this at this time of the year is notorious for this, conversations with our business clients is, I'm going to go and buy a car. I'm spending this money in order to avoid the tax. And in terms of, looking at companies at this point in time, we're paying less tax. We're paying 27.5%. This is now reducing to 26.5% next year. So to me, the whole premise of spending the dollar now to save 27.5 cents in tax or 26.5 cents in tax makes that point even more pointed. Really, do I need the equipment? If I need the equipment, I can put it to good use and I can get a return on that investment. I've got to see it as an investment. What kind of a return am I getting for it? Does it help grow my business? Does it make my business stronger, better suited to deal with times such as we're going through at the moment? So I'm talking about a robust business. If those investments help in that case, then yeah, okay, look, that's a good reason to do it. Certainly not simply trying to save some tax. I really don't. I don't understand that logic. It seems to put the focus on something that really we shouldn't be focusing on so much. I mean, by all means, yes, we will structure correctly and we will look at deductions as appropriate, but that can't be the number one or the first item on the list of things that we would look at.
Mm-hmm. I love speaking to you about businesses in those discussions because to me they correlate specifically with the homeowners as well. Mum and dad sit at home. If we run the household of a business, why are we not looking at growing our profit margin as well? I've heard you speak passionately about revenue versus profit. So in other words, your income versus what you have left over, and focusing on that as an individual. So for everybody at home, what we earn, what we spend, and doing something smart with what we've got left. For business owners, that's called revenue less expenditures equals profit. They're the same discussions. And what you're saying there is focusing on your profit and your structures to increase your wealth is paramount. And you'll use tax minimisation strategies along the way, but you approach that second, third, or fourth down the list if you get the rest right first.
Absolutely. And look, when we're talking specifically about businesses, and again, this time of the year, traditionally, we'd be talking to a lot of clients who are about to set up a new business. It is a seasonal thing. And again, the discussion is, let's put you in the structure that is actually appropriate. And my first and the most important issue that I put on the table is the asset protection. That should be the thing that we focus on the most, because there's no point, or I can't see the point in working hard. You take risks in starting a business. You put your life and soul into it. It consumes you sometimes, and people are passionate about it. Imagine going along and building a great business, accumulating assets, get to the point where you are comfortable, and then all of a sudden something happens and everything is put at risk because your structure is just inappropriate. To put the point another way, I think if you got to that point and you were at risk of losing your assets, I'll tell you what, no matter how much tax you've saved along the way, you're not going to care.
Yeah.
It's not going to be that important how much tax I saved along the way if all of a sudden 10 years down the track, something has gone drastically wrong and I now stand to lose everything I've worked for in the last 10 years. And so I sort of put that to our clients when we're talking to them about this and saying, well, would you like to save a heap of tax but then risk everything? Or would you like to say, okay, well, look, let me put the structure in correctly. How can I protect myself, my family, my investments as best I can? And look, and if there's some tax to pay along the way, well, so be it. But at least I know that whatever I work for, I'm not putting to at risk or to a great degree of risk.
Great, thanks. You have great insights, and we'll come back to a few more of those in the next couple of slides because I know you've got some great stories around that as well. I'm going to introduce Tony now. So, Tony, what are your thoughts on this? As the executive advisor, you see this, with the clients and the accountants. So you sit as part of that integrated advice strategies. You see the discussions, you see these questions, and you also lead the integration to a wider discussion.
Absolutely.
What's your thoughts on these?
Look, and much like what Alf, and if I'm summing up what's been said so far, a lot of it's about a mindset. And a lot of clients that do come in and say, well, look, the question that is asked is, how do I minimize tax? And I think that mindset comes from looking at it philosophically and look at it and say, well, okay, somebody receives their paycheck, just keeping this very simple, receives their paycheck and says, look, I've earned this much and this much has gone out to tax. How do I get some of that back? And just to touch on Alf's example there, we've had clients come in before and said, oh, look, and one comes to mind many years ago. A doctor came in and he had he wanted to, his question was, how do I pay less tax? What do I need to do? And so on. And he said, my accountant, and this wasn't an accounting client of ours at the time, my accountants told me to put $80,000 into blue gum plantation. Fantastic, and I see Alf and smiling there, and we've had these before where, and they've put this money into an investment with inverted commas, right? Where oh yes, but I get fantastic tax deductions. Well, you put $80,000 in, he actually walked out with nothing. So there was $80,000 down the drain. And so going back to, and what we're talking about here is, it's not so much, do I reduce my tax? Is that the right question to ask? It probably, as we've discussed, isn't. It is, looking at your mindset and how do we reframe that question to get the best out of this.
Yeah. Thanks, mate. That leads us on to the next slide. Thanks, Stella. What do the financially successful ask come tax time? So and you can see this, as Tony just said, it's a real change in mindset. The first question is generally, how do I make more money? In other words, how do I structure my affairs for tax time while still increasing my income? So they're taking that much wider approach right from the start. They follow that up with, how best can I use my tax return to create wealth and work towards my financial goals? That's a real key point that both Alf and Ian started early on their discussions with. What's the goal? What are you trying to do? Is it really to minimise tax, or are you trying to do something else with it? And invariably, there's always a reason to have more money in your pocket, and what you want to do with it, you need to be very clear on. So that being front of mind when you're sitting in front of your accountant, it just changes the whole discussion very, very quickly. And your accountant's a professional, but they're not a mind reader. So coming prepared with this shift in mind, I think, really changes the way that the discussions can grow. Also, they'd like to map out the future financial goals, and they understand that they're short, medium, and long term. So there's not always going to be a quick win, and look for ways you can help for that. So that's something that, Alf, I think you were alluding to earlier when you were talking about working with your business owners, finding out where that funding's going, how best that machine can reap rewards, and having that, I'd suggest having that clarity before they make a decision is paramount, and asking you for that. So in other words, do some forecasting. They also like to meet regularly to review the actual figures versus forecast income, expenditure, and goal attainment. In other words, where are we? Are we on track? They're not waiting 12 months to check in. They're wanting to do it more often. Next one, can you do a gap analysis on my financial goals versus actuals? How am I progressing? Similar to the one before, but this is more personal. Am I actually on track to achieve any of my personal goals? Am I using my money? Am I working smarter or harder? Can you provide me with modeled financials so I can make educated decisions? As I said before, you're sitting in front of your financial professional. These are the people that can model the future for you based on your finances, and you don't need to take a stab in the dark or hope. The successful people are sitting down and mapping for success. How do I take control of my financial and personal future? And I like this last one. So this one came up with everybody I spoke to when they're thinking about the people they've worked really well with. They're not frightened to say, what have I missed? They actually go to the professional and say, hey, what have I not asked? Or what are other people that you're speaking to in the same situation as me that you're working with? Work with me, help me. I'm actually open to more information. And I think that last one, for me, in all my experience, really differentiates between people who are coming in ready to start to explore a whole lot more. So that's the feedback we've had. That's experiences from everybody here today. Tony, I'll start with you today. I'll go the other way around. How's this align with the most successful people you're working with when you're sitting in those integrated meetings with accountants? Is this firm true with you as well?
Absolutely, absolutely. It's so much like it is from a financial planning perspective. It should be no different from an accounting perspective. The way that my successful clients certainly approach from an accounting side, and it's what are your short-term, medium-term, long-term goals? And they've got them mapped out, but it's now sitting down with Ian, Alf, or James and Pete and saying, well, okay, look, what do the next 6 months, 12 months, 2 years, 5 years look like from a business perspective? So that's certainly important. It is certainly looking at it, looking at the future. The last one, as you said, is, what am I missing? It's a question that I ask, and James will know this. James is my accountant. What else do I need to do? And so on. So and look, I'll give our team a bit of a spruik. We've got a lot of talent in terms of different areas. So if there's one area that our accounting team may not be, or an accountant may not be 100% on, we've got a wealth of knowledge where they've got access to other peers that certainly do. So that certainly helps as well.
Yeah, great. Alf, from your point of view, mate, these questions sound true with your most successful clients as well, who are really looking to grow their wealth?
Yeah, for sure, Paul. It's exactly right. It's keeping that open mind. It's when you read, when you look at these questions, you put them pen to paper, and and you compare this to the previous slide. The previous slide was I've already come in with a solution in mind. I don't need a diagnosis. I just need you to sell me the medicine. Whereas this, when you read it, it's basically saying to you, well, hang on, have I diagnosed the problem correctly? Do I understand the problem? And then help me. Let's work together on solving the issue or bettering the situation. So it comes across more of an inquisitive and open mind. It's saying that, hey, look, do you know what? If this is your field of expertise, can you help me with it? And I'm prepared to I suppose listen, to look at other options, because sometimes, and again, I think of anybody running a business. We do get entrenched in what we do on a day-to-day basis, and sometimes it's really hard to step away a little bit and take that broad look at it and saying, okay, well, have I considered everything, or am I just so so involved that I'm really a little bit blinded because I'm too far entrenched in it. I need to pull back a little bit, and this is where the sounding board or that third person that comes in and says, well, you know what, there are other options. Well, and even to the point of saying, well, why did you do that, or why do you think that? And we need to ask, and I'm sure we ask ourselves these questions at times and say, okay, well, why is that so? And have I considered everything? So I totally agree. I think it is a mindset. And I do have to say, that the most successful people that I know actually, they're almost like they channel the inner 2-year-old, right? Why? But why? And I love that. And I think, sometimes I think, we need to channel that inner 2-year-old a little bit more.
Yeah. How difficult is it when clients don't come in that mindset to get them to ask these questions? Is that an easy transition, or is that hard to get people over to have these wider discussions when they're not prepared for it or haven't come in thinking of these questions already? And do you think they miss opportunities because of it?
Look, there's certainly always an opportunity to show a different perspective, and no matter how old we are, no matter what we do or how successful we are, there's always that opportunity to learn something new. We don't know everything, and so I always look at it as an opportunity. But look, sometimes it can be a little bit difficult and frustrating, because it's almost like, well, we've got to take that argument or take that perception that somebody comes in with and say, okay, well, can we just park that and can we just look at other options? And so it is, how much time do we spend on trying to refocus and then go from there. So obviously it's easier when somebody comes in with that inquisitive, open mind. I haven't made my decision yet. I just need to sound it, as opposed to somebody coming with their mind made up. And in some cases, and I'm sure the guys will come across this, you know, it's almost like they need somebody to validate the decision that they've already made. And you just go, well, I'm not going to do that. You know, and as much as, and I had a conversation with someone 2 days ago where they were looking at making an investment, and it was very much an investment they were looking to make with the heart. Certainly no head involved in that. And you just go, well, and you have to preface it to say, well, look, you know, I'm here to be the devil's advocate, and I don't want to shoot your dreams down, but I'm going to put a practical perspective onto this. And have you considered the following? And when we started looking at the course of action they were thinking of taking, with a very, you know, calculating and questioning point of view, you know, the whole thing just fell apart, and which was clear. But obviously, you know, this person had fallen in love with the idea of doing this thing, and it's hard, you know, as an advisor, because you don't want to ruin people's dreams. But you know, the worst thing you can do to somebody is say, well, I'm going to agree with you because I want to be nice, but I'm really doing you a massive disservice, because my job is sometimes to say, well, do you know what? I don't think this is a good idea. And I know it's something that you're passionate about, but look, you know, that this is probably either not the right thing or not the right time.
And you think, if, just using that example, if these people had asked these questions earlier, maybe 6 months earlier in part of their planning, would that have been a different discussion?
Absolutely, yeah, because it wouldn't have felt like I suppose, you know, it would have come across more in terms of, well, look, here's what I think I'm going to do. Here's the business case, basically.
Yeah.
Can you just, you know, check my figures and see whether my reasoning is correct? And what would your opinion be, or what could I do? What, you know, whereas, you know, once they come in with that decision already made, it is difficult.
Yeah, it really does shrink the discussion, doesn't it?
Yep.
Yeah. Okay. We'll move on to the next slide. I'm just conscious of the time there, Ian. So here we'll talk. I'll come to you now, Ian. We're approaching what the successful do at tax time. So again, this is based on feedback and over 20 years of experience. So what we have seen, and what everybody here's provided today on all the professionals, is those who are successful in approaching a tax meeting, what do they do prior? They come prepared and have given consideration to the agenda prior. So in other words, as I just shared with Alf, they've contacted their advisor earlier, their accountant earlier, and made sure there's some addition to their agenda if they need it. They're absolute clarity on their financial and personal goals, including time frame and costing. So they're together. That's not happening in front of their accountant, or this is the first time they've spoken about it. We've all shared stories with that. And that's a very, very common outcome at tax time. Know where you want to go and where you are and when, with a focus to make this a reality for the plan. So in other words, they want to make it work. They have a tangible focus on creating wealth and opportunities, considering growing their income from multiple sources, and not just, they don't just want a second job. They understand that they want to work smart, not hard. They know that there's multiple timelines, short, medium, and long term. They desire to make factual and educated decisions and review regularly with modelling and forecasting. So they want to speak to someone who can show them the future and model out multiple decisions or multiple opportunities. Be open to discuss options and alternative pathways, removing any financial blinkers, because it's not all about tax. So they had that much wider discussion, that service circle we spoke about at the start, taking their blinkers off. Minimising tax may actually require an investment or a debt restructure. May involve some cash flow. It may involve a whole lot of other work before you start to minimise tax, but it will result in other opportunities. They know their numbers with certainty. They come prepared knowing what their income is. So something we spoke about earlier, for business owners, they know their revenue less expenditures equals profit. for homeowners, gross income, net income, less expenditures of what we spend, and doing something smart with what we've got left over. And the last one there is really the key, I believe, is they value professional advice. So they're not waiting to come and speak to you guys or girls. They're doing that early, and they're speaking about that into the future, or speaking about their future goals and considerations early. So, Ian, could you share some insights where this has worked and this is reflective in your most successful clients when they're coming in at tax time, and you've seen a real shift? Because I know you've been doing this for some time. I won't say a long time, but you've seen people shift because of the way they've worked with you. And Alf just shared a great story, and you can't squash people's passion, but by educating and getting people prepared for tax time, you see a real shift, and their success grows over the years. Could I just get you to talk to that a little bit, please?
Yeah, absolutely. Thanks, Paul. Just one thing. I know I didn't speak on the last slide, but these two slides actually do roll into each other. And what I mean by that is, one of the things is tax time is not the time to just focus on tax. It provides an opportunity for you, a point in time when you can say, well, do I want to focus on the rest of my life? Why I'm actually working, whether it's in a business and running a business, why I'm actually working, doing the job I'm doing, or whatever it might be. It's a chance to focus. Now, I will go through this, and I see the word focus there a lot. Successful people are focused. Tax time is nothing more than an opportunity to provide that point in time to say, well, am I going to start being focused? The professional advice, which is the last one, and I cannot agree more, it's understanding that once we're focused, once a professional, if the person is focused and they've identified what financial success actually means to them, all of the goals along the way, whether it be short, medium and long term, the professional advice is actually working them through to make sure they're achieving that particular, those particular goals, or achieving what they're actually wanting to do. Being prepared, and the clients that are prepared, and else right about making sure that their mindset for coming in, particularly having been an accountant in the past, people still come in and see you with an accounting type mindset, whereas they've got this strategy in place, but they haven't actually got any focus at all on what they were actually trying to achieve. It was just a good strategy because their friend told them that one, and they're actually quite hard to get them back. And again, as professionals, first of all, we can educate them to focus or help them focus, because that's what they've got. Successful people focus on what they're trying to achieve and what the success means. We focus on timing. When do you want to achieve it? What are the dollar amounts? And that's all stuff that we do, but the value that we provide as professionals is in the regular meetings, whether it be individuals. We do and what I mean by individuals, I don't just mean individual people, I mean individuals in businesses, because every business has individuals behind them. From a financial planning perspective, we meet with them twice a year, not to just say how things have performed, because if they're long-term investments, it's not really the relevant thing. It's how are we tracking towards their goals. There is no difference at all in businesses. Businesses have this opportunity. Now, at the moment, they only take, quite often, the ones that aren't successful, or the ones that just plod along, they only see the tax guy as the accountant, as the tax guy, the tax man. I know I've been called that a lot of times. And so they come in once a year, or they might come in every BAS. So they come in for every quarter. So they come in 4 times a year. What do they talk about? Those people often just talk about their tax. Well, successful people are coming focused on, well, what's the next thing we want to do? I know some of the best success Alf has with clients, because he does it extremely well, is he has regular board meetings. We usually set up a board meeting. So every whether it's month or quarter, he will go to the client's premises and actually go through a proper board and properly go through and discuss their numbers, but also what their vision is, where they're trying to go, not only tomorrow, but the next year, the next 3 years, next 5 years. When are they're looking at selling? What are they looking at doing? Merging, buying, and getting everything prepared and tracking that all the way through. One of the, I suppose, and the funnier things when I used to work as an accountant, people would say, well, how much would this cost? Is it some sort of impediment? Well, if something costs you $3,000, it makes you, or $10,000, and it makes you $100,000, is that a cost for an investment? We focus on a lot of the wrong things. Unsuccessful people, I wouldn't say unsuccessful, people who are not successful often focus on the wrong things, because that's what the general population tells you to focus on. If you want to come to and have a successful tax time meeting, think about where you are in your life and where you want to go to. And these are the sorts of things to be thinking about, and be prepared for, you know, a variety of ways of doing it. Work with your professionals properly. And that means don't just think of them as the tax person. They've got a wealth of experience, not just in, you know, up in Brisbane, in Sydney, right throughout our group. We have some amazing abilities in accounting with some, you know, amazing knowledge. Yet we worry about whether we get a tax return done. Again, if we want to have success in businesses, it is exactly the same as if we want to have success in as an individual, which is, what are we actually trying to achieve? Why are we doing it? Why do I get up every day? Because if you can't answer those questions, I would say, well, how do you know that you're successful?
Good point, mate. I think you made it clear that mind shift is really paramount in the preparation for the meeting. So that just gives you a wider discussion. And in fact, you sit in front of the accountant is a great place to start it. So coming prepared for that. I think you take out that as well, is that you can, and Alf said the same thing, question your accountant, push them for more. Absolutely, come with an agenda like this. Tony, as the advisor, I said in those integrated meetings before, you've seen the approach work as well?
Absolutely.
You share an insight to where you've seen clients grow after meeting as the accountant and the advisors growing their approach to their meetings?
Yeah, absolutely. And much like both Ian and Alf have already spoken, and I've just been taking some additional notes here as well, is, and this is what we've seen, is that, you know, we've seen that approach that we do take in financial planning. So as we've mentioned, you know, so I see clients, you know, once, twice, 3, 4 times a year. With business clients, where we start to see them, and as Alf said, you know, be on their board meetings, or we are part of their board. So it is that integrated approach where you have the advisor, you have the accountant, you know, looking out for you as a business, and meeting on a regular basis. And what you then see is you actually see the focus shift in terms of not so much looking backwards, but now we're looking forwards. And I think that's the takeaway from this, is that, you know, tax is not a backward looking thing, and accounting is not a backward looking thing. Accounting is actually, look, let's forward plan in line with your future goals, and very much like what the plan from a financial planning perspective as well. So that's extremely important. And the other point that I've written down here also is, you know, be open to solutions. I wouldn't go to my doctor, and, you know, this is what I was thinking before. You don't go into your pharmacist and say, look, I've got a headache, just give me Panadol, or whatever the case is. You actually go into your doctor and say, well, okay, look, I've got this, and this. What do you think it is? And it could be something completely different. And that is where you look at it and say, well, okay, look, you know, I'm going to go see my accounting professional, whether it be David in Sydney, whether it be and the team in Sydney or Melbourne, or here in Brisbane, is that we've got a group of specialists that know exactly what they're talking about. So, yeah.
Okay, well done, guys. So thanks for sharing those stories. I know we've got, in preparation, we could go for another 2 hours about this, but I'm just conscious of time. Stella, we'll just move on to the next slide, please. So where do I start for everybody at home? You know, we've covered quite a bit here, and we shared some really good stories. In 3 or 4 words, where do we start? What's the next? What can everybody at home do in preparation for tax time? We know it's coming. They've probably got meetings booked. What can we do to make this time with our accountants most successful, and start that preparation to see success in future years? 4 words in?
Identify what success means to you.
I didn't count those words, but that's a really good point.
You left your
That's
word
great. Without that, you don't know where you're going. Tony?
Look, mine's longer than the 4 words, because I was going to say, look, you've got to people have an opportunity to do what they can for this financial year. I always encourage clients to see their accountants before the end of the financial year. So look, I know our team's busy, but if you can book in over the next few days to do whatever you can for this financial year, get it done. That's important. But in 4 words, look, be open to solutions.
Yeah. Great. So know where you're going, be open to solutions, have a wider discussion Absolutely. Alf?
Yeah, I was hoping you were going to pick me first, mate, because these
I was
boys
trying to
just made it
shoot
really
you around.
difficult for me. But look, it's exactly that. We talk about success, but do we really know what success means? And it is a personal thing. Success for me will be different to success to Ian and Tony and yourself, Paul. But so many people seem to go through life without actually asking themselves that question, and get that really clear, and then too be prepared to communicate that, because you touched on the point early on in this presentation that we're not mind readers. What if you're not clear about what you want to achieve, then I've got to be guessing, and really that's super hard to do. So be really clear on success. I love the open mind thing. That would be the way I would be approaching any of these kind of meetings. It's saying, look, you guys are experts, and in terms of, I'm not a financial planner in the panel, and yet I've been in this industry for quite a while. I still go to Ian and say, right, you're the financial planner. As far as investments are concerned, help me. Show me what to do, guide me along, assist me with your expertise, because I don't have that expertise, and I'm looking to you to help me out, and just say, let me know when I'm on the right track, or if I'm not on the right track, bring me back to where I should be going. But he's clear on what I want to achieve, so I'm not shifting goalposts on him.
Yeah, great. Look, guys, thanks for that. Thanks for your input and insights. I think some great things to take out of that. Be prepared, know what success looks like, value advice, and come with an open mind are the real takeouts I took from that. So thank you. For everybody online today, we've got some questions here. I believe we've covered them all. The only one we haven't directly covered, is there anything different for, this will probably be for you, Alf, is there anything different for working from home during COVID in terms of claiming work from home expenses? That's the most common one that we haven't covered today. But funnily enough, guess what? It's focused on tax. How do we get?
Yeah, look, and there is, the ATO has increased the simplified rate that you can use to claim your home office expenses. It's been bumped up to 80 cents an hour. So, as far as what you would really need to do to be prepared is to focus on the time during COVID, especially if you've been working from home, or you are totally working from home, not just on after hours, is to keep a record of the number of hours that you're actually working from home, because you'll need that the number of hours, the total number of hours for your accountant to be able to make the right claim. And really, as far as protecting yourself from the ATO, it is to make sure that you do have a diary record of some sort. You're not you're not plucking the figure out of the sky, that there was a reasonable basis on which you worked those hours. For the prior period, it's back to it's at the old rate, so you'll need to split those two.
Okay, thanks, mate. Tony, one quick one for you. We have some large capital gains in some of our self-managed super fund direct shares. Should we at any stage consider realising these?
Very simple, and I think it covers on the core of what we've spoken about. It depends, and I'll answer it with it depends. It depends on your circumstances. It depends on where you are in life. Depends on a whole heap of things. So the one thing that I would say is come in, sit down with, depending on your location, sit down with Ian, sit down with Katerina, sit down with myself, and we'll sit down and have a look at it and see if what's best and what do we need to change as part of that.
That's a great starting point for a much wider discussion. But my final point to everybody online, as well as saying thank you very much for joining us. If you're looking for an expansion on your agenda with your accountants, please feel free just to reach out. The service circle that we started with the second slide, that's in everybody's office. That's a great place to start if you want to start to think about the other discussions you can have. But your Modoras professionals are absolutely there to help and help you, coach you through some wider discussions. So thank you very much. This is all recorded. You do have access to it. For everybody who's online today, we do offer a complimentary 30-minute phone access to any of our professionals. So please feel free to take up on that offer. We can answer more of those specific questions, not so much in a general forum like today, and we can certainly arrange for you to get in front of some other professionals. Following this webinar today, we move into a new financial year. So next slide, please, Stella. And we will be having more live webinars. We're going to be doing these on a monthly basis. We've had fantastic feedback from the 3 we've done to date. So we're going to continue those. We're going to run them once monthly. And we're always looking for suggestions of what we can make topics on. In fact, one came through from someone today looking for some more information on issues facing self-funded retirees. So that will certainly make up one of the topics. If you'd like to add some more interest to those topics and we can specify for you, please let us know. Thank you very much for today and look forward to speaking to you all at some stage in the future. All the best and enjoy a successful tax season this year when you're prepared and ready to have a wider discussion. Cheers.